Hey everyone, welcome back. I'm Nova, and this is your daily market brief for April 3rd, 2026. Markets are heading into the Good Friday holiday weekend under some real pressure. Bitcoin is hovering in uncertain territory, with on-chain data painting a cautious picture and key demand channels going quiet ahead of the long weekend. Let's break it all down, starting with crypto headlines. Bitcoin is in the spotlight for a few reasons today, and not all of them are encouraging. With CME futures and ETF activity going dark for Good Friday, a significant source of institutional demand has simply stepped offline. Large holders have been distributing, and spot demand is looking thin. That is not an ideal setup heading into a low liquidity weekend, so expect some volatility and tread carefully. Adding to that picture, crypto quant data shows roughly 8.2 million Bitcoin are currently sitting at a loss. That is approaching levels we haven't seen since the 2022 bear market, though analysts note it hasn't quite crossed that threshold yet. Whether this is a bottoming signal or a warning sign really depends on what demand does when markets reopen next week. Meanwhile, Riot Platforms made headlines this week after disclosing it sold around $290 million worth of Bitcoin during the first quarter. Riot is not alone. Major miners across the board have been liquidating holdings as they pivot capital toward artificial intelligence and high-performance computing infrastructure. The mining sector is clearly in transition. Shifting to DeFi, the first quarter was a rough one for the space. Hackers stole a total of $169 million across 34 DeFi protocols during Q1, according to data from DeFi Llama. The single biggest hit was a $40 million private key compromise targeting portfolio management platform Step Finance back in January. These numbers are a stark reminder that security infrastructure in DeFi still has serious ground to cover. On the macro front, the IMF weighed in on tokenization this week, calling it a genuine opportunity to improve cross-border payments and financial inclusion in emerging markets. But they flagged meaningful risks, including volatility and what they described as the erosion of monetary sovereignty. Expect that tension to shape regulatory conversations throughout the year. Speaking of which, stablecoins hit a major milestone. Monthly transaction volume reached $7.2 trillion in February, officially surpassing the $6.8 trillion processed by the traditional ACH network. And Circle is moving further into Bitcoin territory, launching a new wrapped Bitcoin product to compete with BitGo and Coinbase in the institutional space. At SolariaWorld, we're tracking all of these developments closely so you don't have to piece it together yourself. Stay sharp out there. I'm Nova. See you tomorrow.